Thank you very much for reminding me. So what I've done essentially up to this point is that I try to bring from this ending date, I generated the quarterly date, or I just typed in quarter like that. Then I try to write out your income statement line items, then brought back the yearly, January financial statement from this, all right? So, and I've been able to bring back all the necessary figures to arrive at my earnings after tax for January 2022. So the next thing we're going to do now is that we're going to do for February for everything. But because, by the time you are linking from a different worksheet, is putting it in absolute reference. What I mean by that is that it's doing a full locking. That is locking. You can see that both the column and the rows are locked. So if I copy to the right like this, it's not going to work. It's going to copy the same thing because it is locked. So what you will do is that you have to unlock, you have to remove those dollar signs in order to copy across. So I will just highlight on everything and then do my find replace. Replace this dollar sign with what? With nothing. So replace all. So you can see now 14 items have been replaced. So that means that if I show you this revenue now, there's no more any locking on it. Understand? So we can then from here copy to the end of the year using our Control R or HOI. So now we've been able to generate all the financials. If you look at the ending profit now, this is 5.2 million. It should be what we have here. You can see that this is just the same thing. Okay, so that is just a way to be efficient. It's very important to be efficient because you will have a lot of things to do and time is very, very important. So I want to use this for my balance sheet. You can't paste. Okay, fine. Let me go back there again. So our balance sheet should be here. And I can see that, it's hiding. Everything is starting from column C. So what you do to unhide column A to B, even if you do like this and you try to unhide, it will not work. It will not work. If you highlight up to this point and try to unhide, it will still not work. So what you're going to do in this situation is you come here, this cell naming, you type A1, and it goes to that A1 exactly, and you press your Control and you tap Shift button 2 times. So you can then bring it out. You still have to unhide, you still have to hide this one. Then go to A1 again, Control, double tap on your Shift button, then bring it out. Now you can unhide. All right. So I don't know how that happened. It's just, but in every situation, you have to find a solution. So this will be our balance sheet. All right, so let me open up balance sheet items here. In the balance sheet items, we have to bring back the previous period financials. So first and foremost, let's quickly list our balance sheet items. Here we have assets, and then we can put that in our heading 2 cell style. So we have non-current assets. Okay. So first one, we have property, plant, and equipment. And next we have intangible assets. You could also have your long-term financial assets. financial assets. And then here we have our total non-current assets. Let's put this now as subtotal sales style. Okay. If you have questions, please ask them. Then here we have our okay, this one supposed, okay, non-current, we have current assets. So here we have our inventory. We have trade receivable. Trade receivables. You can have your order receivable here. I'm just trying to list out what you might have. Your company order receivables. You could also have your prepayments. And then you have your cash and cash equivalents. Okay, so here you have your total current assets. You have your total current assets. And then finally, you have your total assets. So here, let's put it in a subtotal. And we put this one in our total. So let's quickly list out the balance sheet, the liability items. So here we have liabilities and equities. The first thing is current liabilities, right? You know what we have under current liability as usual, trade payables. And then we also have we could have trade payables, we could have order payables, we could have accruals, and then we could have bank overdrafts. No, before bank overdrafts, we could have tax payables or tax payable. Let's just make it that way. And then we have our what? Bank overdrafts. Or you could also have some other short-term fund, short-term loan. So here we now have our total current liabilities. Then let's put this one in our words. Subtotal. Can you see the importance of this sales style now? It makes you work faster. So next we have non-current. We have non-current liabilities. Then we could have our long-term assets here. Long-term liabilities or long-term loan. Sorry for that mistake. And then you could have your maybe finance lease, etc. But that is not necessary here. So let's just have our total. Please, I want to just put on. Okay. We have total non-current liabilities. So here also, we put it in our subtotal sales style. And then finally, we have our equity. So we have share capital. And then we have our retained earnings. Retained earnings. So now we have total equity. This one also, subtotal. And then we have total equity and liability, or total liabilities and equity. So this will be what? Our total sales style. So now we can start bringing back our balance sheets line items. So we start from, let me just push this back a little bit so that you can see me. Let me close up this a little bit so that you can see what I'm doing. So from December, We come here. This is our property, plant, and equipment. So to open that up, now you can just press Alt HOI. It will open the cell up. Intangible assets, you pick it from here. So there's no long-term financial assets. So we just have to do our summation from here. And then for current assets, we go and pick our inventory. And we can just remove the dollar sign here so that we can copy down very quickly. So we can copy, okay, it will still make a lot of meaning. So trade receivables, and then other receivable, there's none. We have prepayment, and our cash and cash equivalents. So let's get a total for this. I mean the subtotal. And you know that we have to get our total asset, we just have to add total non-current assets plus total current assets. Then trade payable. I know all these things we are doing, they are still very familiar ground for you, but don't worry. We have accruals, and then there's tax payable here. There's no bank overdrafts. All right, so you just have to sum everything together. And then my long-term loan is here. Sum this. Oh no. So then finally, the share capital. And this. So I need to add my total liability plus that equity here. So invariably we should have, let's just do our balance check here. Balance check, all right? So total asset must equal total liability. So total assets minus, so it's giving us 0. Now, let's just try to remove those dollar signs so that we can remove the cell referencing. Just do the same thing that we did the other time, Control H, then you replace everything, all the dollar signs, you replace them with nothing. Now you can copy to the right. All right, so let me hide this again. So let me just quickly open up. I want to open this like this so that we've been able to bring back the monthly financial statement for CT. It's actually supposed to be CTP. That is Crystal Trowell PLC monthly financial statement. Let's just quickly compute the cash flow statement. So I can still borrow from here. I'll bring this here. So this will be my statement of cash flow. So the first item on my statement of cash flow would be my cash flow from operating activities. Cash flow from operating activities. So let's put that in our heading 2 cell style. Mind you, you can decide to change this color to whatever you like or what your management would like. All right. So the first one is profits before tax. All right. So we need to be a bit fast. Profit before tax. Then we do our adjustments for non-cash items. Okay. We also need to put this one in what? Explanatory cell style. In fact, I would like to make this my explanation cell style a little bit smaller. So I just go back to this my cell style, modify, and then I come to my formats, I come to my fonts, then I can reduce it to 10 or even 9. So wherever we've used that explanation cell style, it will affect everything. And this is the beauty of it. This is the beauty of cell styling, because you don't have to go back to all your workbook, everything you've done where you've used that cell style, and then start formatting it one after the other. It's going to take a lot of time. So that cell style will help you to do everything automatically. So you can see down that it has affected everything. So now we have let me just, instead of adjustment for non-cash, let me just say add back non-cash items. So we have here depreciation, we have amortization. Can somebody tell me something else that can be included here apart from depreciation and amortization? So let's just talk. I'm trying to look at our faces now. So what else can we add to that? We're actually not going to add anything, but I want to know, in case you have a different thing in your company, what else will come under this add back non-cash items? Akim, Christiana, I have powerful people here. Kola Wale. Let's just assume we have other items. What other items could come here when we are trying to adjust for non-cash items? You can also use the chat box. I'm ready to. Let's use the chat box. Donatos. Folashade. Over to you. Okay. Kola Wale is trying to say something.
Investment gain or loss.
Investment gain or loss, yes. And you could also have your gain or loss on foreign currency translation or thereabouts. Is there any other thing you want to add to it? So you can also have here your gain or loss on retirement benefits, planned assets. Like, you know, when you under IAS 19, the company must also like set aside certain amount that is called planned assets that you use to pay for your planned obligations. So when there is a fluctuation, when there's a gain or loss, so that can also come here. So you can also have that here as like non-cash items. All right, so if your company has other items, you can put them here. So finally, we're going to have what? I mean, not finally, we're going to have adjustments for working capital. Let me just call it WC. So let's just try to indent this one a little bit. Odds, age, indent it. So I'll put this, okay. This one I will have my inventory. I will have my trade, receivables, and I will have my other receivables, if any, and then prepayments, and then I will have my trade payables, other payable, if any. Then I will have my accruals. If you like, if this is going to take a lot of space, you can do this adjustment for working capital on a different worksheet and then link it. Then I will have what again? Taxation. Taxation. Then I will have tax paid. This will be actual tax paid. And if you remember Nigeria tax law, we pay on preceding year basis. So the tax paid that will come here will be the tax for last month, just like an assumption. But if you're working on a yearly model, then your tax paid that will come here will be your last year tax. So this adjustment, let me just put it in my explanatory cell style. And this taxation also will go to explanatory cell style. Now we can start building our statement of cash flow. So we're going to start from January. What's our profit before tax? Just pick it up from here. And there is it. Oh no, I think I picked the wrong one. I picked profit after tax. Profit before tax is here. Okay, so we had back our non-cash items, depreciation and amortization.
Supersport is proudly brought to you by Jack Daniels. Make it count.
Okay, next I'll bring my amortization. So the next thing is my inventory. And if I'm trying to get my change in inventory, it will be last period inventory. And that is the reason why we have to bring this last year financial statement. I mean, the closing financial statement. So it will be last inventory minus current inventory. Okay. So trade receivable is the same thing. Can somebody explain to me why we are doing it this way? Why it is last inventory minus current inventory? Can somebody provide an explanation for that? Let me read what, okay. Impairment charge, yes. Fair value gain on investment, gain on sale of property. I won't agree with you that gain on sale of property is a non-cash item. No, when you are selling property, you are receiving physical cash. So it won't go under that. Unrealized, I mean, unreal used exchange gain. So I think you want to write unrealized exchange gain or loss. That will also go there. I agree with you. But gain on sale of property, I don't solely agree. So do you have a second opinion to that? Someone said we can put under our non-cash item, gain on sale of property. What is your opinion? Let me unmute us.
Can I speak?
Oh, sorry, please go ahead. Can you unmute yourself and go ahead?
Oh, okay. So for gain on sale of assets is actually cash that is received. So you have made the sale, you've received revenue over and above the carrying amount in your books. So it's actually a cash item and it will not come here.
Okay, it will not come here. Thank you very much. So I was trying to ask us in our statement of cash flow, why do we say if we want to get our changes in inventory or change in inventory, why are we saying previous year balance minus current year balance and not current year balance minus previous year balance? So order payable. So prepayment is still the same thing, the same logic. past it. So this minus this for our prepayments. Then for our trade payable, we have to switch it this time around. It has to be current year balance minus previous year balance to get our trade payable. Other payable, still the same thing. Our liability items must be current year balance minus previous year. Trade order payable minus previous year. And then our accruals. This minus this. So now we have our tax paid, which will be last year tax expense. We want to assume that we are paying last year tax expense this year. And then here we have what's net cash flow, or let me just call it net cash flow from operations. So I put it in my subtotal sales time. Okay. So now why we are saying under inventory, okay, let me just put under changes in inventory, receivable, payable, prepayment, etc. We are saying previous year balance minus current year simply because if inventory had increased from previous period to the current period, that simply means that we have like unfavorable cash position because our inventory is being tied down in our store. We are not selling it yet to convert it to cash. So it's logically an unfavorable cash position. And that is why we are saying, okay, that our balance for the previous year minus, our balance for the previous period minus balance for the current period should give us our changes in inventory. Alternatively, when we come to prepayment, or let me quickly explain receivables. So last period, let's say December 2021, you are meant to receive 100,000 naira. And this, as of January 2022, your balance is saying that you're to receive, your receivable is 200,000 naira. That means that you have a negative cash position or unfavorable cash position of what? Of 100,000 naira. So that is why we have to say closing, previous balance minus current balance. The same logic for the payable. So as at last year, your payable was 100,000 naira. As at January this year, your payable is 200,000 naira. All right, that means that you have a favorable cash position because that amount that you're supposed to have paid, you are not paying it yet. It's still in your company. You are using it to run your business. So that is why this payable has to be positive. Change in payable has to be positive because except maybe your payable had gone down, maybe you had 100,000 naira at December 2021, and now you are having 50,000. So that means that you have an unfavorable cash position in that respect, and that is what will make it negative. Do you understand? Do you understand?
Yes.
Yes, we do.
Okay, thank you very much. So then here we have a net cash flow from operations. So the next thing is going to be our cash flow from financing activities. Cash flow from, I think I just need to zoom out, zoom in a little bit. Seems to be too big for me. Okay, let me do it this way. Cash flow from, let's use investing this time. Let's say investing activities. So the first thing here, based on the data we have, should be acquisition of PPE. Secondly, acquisition of intangible assets. Okay. And in your situation, you can lump the two together and call it acquisition of fixed assets. Then here also you can have changes in financial assets or whatever, but we're not going to include that this time around because we don't have value for it. But one thing I must quickly explain to you is that you see this, the way we lay out our financial statement line items, it must be consistent all over all this workbook for that automation to work perfectly. You know, here in our balance sheets, we are starting from row 33. So in all the other workbooks, it must start from row 33. If you see reason to insert one item in any of these company, you must do the same for the other company, even if it is 0, put it there. Okay. So acquisition of PPE, what else do we have? I think that is all. This would be our net cash flow from investing, net cash flow from investing. All right. So how do we compute? How do we compute our acquisition of PPE? How? Let me explain to you. So the idea is that you're saying that the current period balance plus your depreciation for the period minus your prior period balance. Okay? You come here. This is our ending PPE balance for the current period plus your depreciation for the period minus your last period PPE balance. So this is giving us 767. And if you remember from our financial statement preparation, anything that has to do with acquisition, that is, you are dispensing cash, must be put in negative. All right. Let me see this, my tax paid, if I've done the same. Okay, fine. So the same thing for the same logic goes for the intangible assets. That will be your current period intangible plus, let's quickly bring back the amortization minus the prior period intangible assets. So the same way, let's try to put it in negative. And then we can sum that up using your alt equals to sum that up automatically. And finally, we're going to have our cash flow from investing activities. From financing activities. So here we need more space. So the first thing here will be changes in borrowings. That will include both short-term and long-term borrowings. And then finally, we can have our shares issue. If we had issued more shares, it will come here. We can also have our dividend paid. Okay. So both under these are changes in borrowing. These are covered both repayments and also new loan. If there's a new loan, if there's a repayment, these are our changes that covered everything. So and I think that is all we need here. In your own situation, depending on how your company does theirs, the items might be completely different. I just took a very simple example here so that we don't waste a lot of time. It's a concept that I want to show you. So changes in borrowing, what do we do here? It's simply going to be current year borrowing, current period borrowing minus previous period borrowing. So by 12 noon, we're going to have a break. 10 minutes break and we'll come back. So that will be previous period borrowing. I mean, current period borrowing minus previous period. And that's giving us 0. Issue of shares. It will also be current period minus previous period. That's also 0. Then dividend paid. Dividend paid will be last period retained earnings plus current period profits plus current period minus current period retained earnings. That will show us if any dividend had been paid. And mind you, dividend paid should also be negative because we are parting with cash this time around. Then we can sum this together. Then we should have what's our cash flow reconciliation. Or let's just call it, okay, cash flow reconciliation. You can call this anything you like, reconciliation. So here we have our beginning balance. Beginning balance. Here we have our changes. Okay, let's just say cash flow during the year or changes during the year or cash during the year. Cash during the year. Then we have our ending balance, ending cash balance. So this one also, beginning cash balance. All right. We are getting there gradually. So our beginning cash balance will be here. Okay. Our ending cash balance will be beginning balance plus cash for the year. All right. So let's just try to bring back our beginning cash balance by going to our cash assets 31st December 2021. And this is our cash and cash equivalents. Okay. Let's just put everything in our total sales tie. Okay. So we should also have a kind of reconciliation to be sure that what we are doing is correct. Let's say our cash per balance sheets. Okay. So this would be the difference. So we can just come here, cash per balance sheets. Okay, this is our cash per balance sheets. Then cash during the year. That will be cash flow from operations plus cash flow from investing plus cash flow from financing. All right. So there is still an issue. So we have this. So we are having a difference of what, of how much? That will be this minus this. We're having a difference of 270. Can somebody guess why we are having this difference? A very fantastic guesser. We've made a mistake, and that is why we are having that difference. But I want somebody to tell me. Any idea? Any idea of why we have this difference? Okay, let me not even use this. Okay, let me just do something. Or AJ, no. Okay, I want to remove all this. Let's just leave it this way. Okay, fine. Nobody has an idea of why we're having this difference. Okay, the reason for this difference is because if we look at our last year income statement, we brought back our tax expense, which is our last, for the previous year tax page, we brought back our last period tax expense. And here we are bringing back 0. But you should know that this tax expense had already flow into this balance sheets that we are using, to get our current period working capital, etc. So we need to return, we need to have something, we need to have our tax expense here. Either we go back and copy the old income statement for 2021 so that we can return our tax expense, or we just find a way to type in that our tax expense here. So I prefer we just copy the whole financial statement for 2021. Do you understand? Do you understand that explanation? Let me just quickly do that. I have to stop sharing for a moment. Okay. Let me just bring it back from here. Okay, so I can then let me just quickly share my screen again. So now I've brought back the financial statement or the income statement for 2021 December. So you can see our tax expense here. This is our tax expense. So by the time we just go back to our, and if it should have even picked it automatically, it should be balanced by now. So you can see now that everything is balanced. So our ending cash balance is the same thing as our cash balance per balance sheet. So in your company, in case they, maybe even if you're an external auditor and you already prepared your income statements, you've prepared your balance sheets, you have your closing balance sheet for the last period, it's easy for you to prepare your cash flow statements, okay? And this is using the direct method. Whether it's direct or indirect, I don't even know. So from here, let's just copy all the items to the right. Before that, let's just try to remove the cell links. Okay, we've copied this to the right. We've done the same thing for balance sheet. So let's just try to remove the links because it's going to affect what we're doing. Anything can change in the source document, except if, it's not on the same workbook. So it's going to be very difficult. It's better we just remove all the links. So you can just say Control C and then you paste special. Let's do the same thing for everything. All right. So if you have any question up to this point, please ask me. That is why we are doing this. I want you to go back to your company and go and shine. Okay. So we are not yet there. We are still going to do the automation. This is just what we are familiar with. Control R. So everything is balanced like that, you can see. Everything is jiving. Fine. So the next thing we're going to do now. Hello, are you there? So what you're going to do for me? For all these month-wise financial, you will go back and you will fill it up for all the companies. You already have the financial statement for all the companies, the month-wise financial statements. You will fill all these up and generate your statement of cash flow, just the same way we've done for CTP. We'll not be able to do that in today's class, but I want to trust you because, we had an agreement that we are going to work together. You're going to cooperate with me. So make sure you do this for the other 4 companies. 1, 2, 3, 4. Do the same thing that we've done for CTP. Do for all these. Then by the time we come next time, I don't know where that's going to be, probably next week, Saturday, we can then we're still going to create some other worksheet for the consolidation. All right, just make sure you do this for me. Next thing we're going to do now, let's quickly do our year-to-date financials, CTP. So let's do our year-to-date financials. First, I want to come here. I want to change this to CTP. I just come here. I'll go to my guide, then pick this like that, and that's showing me that Crystal Trowell PLC monthly financial statement. Okay. So here also, I want to format it this. I need those quarterly. I need this here also. So if I want to copy to everything here, all you just need to do is to highlight everything at once. You don't have to do everything one after the other. It's going to waste your time. Then paste. So even if you go back to your BWL, you see now that everything is already there. It's there. So Excel is a very, very dynamic software. So you can do so much. Before you go and start learning Python, before you start learning those complicated like R, like Python, like SQL, like Power BI, make sure you know Excel. In fact, if you know Excel very well, SQL become a walkover for you. Power BI will become a walkover for you. So just try to get the nitty-gritty. And I really want to let you know that if you can follow the 7-day series that we've been doing, right from day 1 to day 7, you're already an advanced Excel user and you are better than a lot of your colleagues. You can go home with that. Take that one home. You are better than a lot of your colleagues if you can go through all these classes. So at this point, I want to entertain our questions. I want to interact with us. In fact, I need to just see your face. I want you to look at me and let's see if there's anything we can iron out together. Hello guys, do you have question? To know if there is increase or decrease in the year report, okay? Please, I want you to unmute yourself, everybody. Kola Wale, Dokia 6.2, Christiana, Folashade. I want to entertain our questions now. I know most of us have been doing something similar in the past. So is there any question? Is there anything you just want to ask on the fly?
Good morning, bro.
Good morning, sir.
How are you, sir?
I'm fine. Good to see you.
Good to see you too. I really appreciate you so much.
Thank you very much.
God bless you more for the impactful knowledge.
Amen.
Really an advance. It really gives us an advancement.
Yeah.
So I did not start from the beginning.
Okay.
Because I learned that you've taught about lesson 1 to 7.
Yes, and we are on day 5. I'm just calling it day 1, day 2, day 3, day 4. Day
okay,
5.
day 1. So
yeah, but it's not sequential. It's not like
yeah, I'm not privy to those days spamming
the videos,
lecture pass. Yeah, the videos.
Okay.
So I don't know if you can share it.
Of course, I'll provide it. Everything is available free. Free.
Okay. Then the second thing is this. You know, where I worked initially, we are using this customized financial models.
Okay.
So it was being brought up from Excel, all these customized.
All right.
But if I want to set up an Excel ledger,
okay.
Ledger, you are picking those figures from prepared accounts.
All right. So you want to prepare your own. You want everything to be dynamic from start to finish.
Exactly.
Right from when you are posting transaction into ledger.
Transaction into ledger, then
generate your trial balance. From
now
your trial balance, you prepare the accounts. And then, okay, I understand what you're doing and what you're trying to say. This is very, very possible. And you will learn from my previous video. It's also available for free on my YouTube. This one, I got a prepared ledger.
Okay.
Where I pass it through Power Query. I cleaned it up. Then brought back, the combined ledger. The ledger is a monthly ledger. I combined in using Power Query in Excel. Then brought back a combined general ledger. From there, I was able to use all these simple Excel formulas to prepare the financial statement on a monthly basis and on an annual basis.
Okay.
You understand? From monthly, you can sum it everything. You can sum the income statement together to get your annual financial statement. And then from this, you can then do your consolidation.
Okay. Yeah.
All right. Yeah. So even if you want to go a step further, and say instead of picking, you can spool out your your general ledger from your company software. You can also use your Excel to design a general ledger that generates your trial balance for you. It's possible in Excel. Okay. And I have a template. I can share it with you free of charge. A template of how you design. You just type in your transaction. Today, we are buying calculator. What is the code? You put it there.
Code.
Okay. What is the account that is going, and etc. So you prepare your general ledger easily, and you generate your accounts on a real-time basis. You can just click your refresh button, and you have your balance sheet. You have your income statement.
I won't mind if you are.
So this template is good for someone, for a small organization that is not using a robust accounting package yet.
Okay.
Yeah, it's all right. So thank you for the question.
I won't mind. Then maybe this one will be a personal something that I'll call later. I'll get your number from the WhatsApp.
Okay, fine.
Really, really appreciate it. Thank
you very much. Thank you so much. So let's just go ahead. I just wanted us to use our opportunity to let off some steam. Now, in the next 30 minutes, let's quickly do our year-to-date financial statement for Crystal Trowell PLC. Now I'll share my screen again. And now we are here. So instead of typing out all those line items one after the other, it's going to be a lot of work. Let's just copy from here. Why not? We can copy from here. In fact, we can even copy just everything like this. Then we delete what we need to delete. Okay. So we can copy. And I think this one is starting from 8, right? 8. So we can highlight on everything. And we come to 8 here and paste. All right. So what we have done, it should reflect on the other worksheets. So if you come here, you can see now that you have it. You have just everything. Though we don't need it, we only need the names. So let's come back here and clean everything up. This is faster than try to type out everything all over again. So let's learn to work smartly. Efficiency is very important. And Excel has given us several tools and functionalities to make our work more efficient. When you are doing, some people could do this thing that we are doing for 3 days. They'll just tell you they are still preparing the month-end financial statement, month-end this, month-end that, and they'll be there for a week. All right. So how do we do our year-to-dates? So what we want to achieve is that in January, we want to return this revenue, okay? In February, we want to return. In February, we want to return the accumulation of January and February revenue. In March, we want to return this. Okay, I think I will have to mute everybody. Okay. So that's exactly what we want. We want to return the cumulative figure. So very quickly, the quick formula I can think of that is also dynamic is to use our summation formula, sum. But we're going to use it in a different way. So January, let's say sum. All right. Then we go to our monthly financial. We click on our January, and you can just type in this your full colon. So when you press full colon, it will bring back this. So you can see that now that we are on L9 and L9. That means that we are still on the same cell. Close that bracket and then fix that beginning balance. You have to lock it. All right. And I would like us to lock it in a way. So somebody asked me a question that, why do I lock the way I lock or something like that? The objective for locking it, and he asked me to put more light on this cell referencing or cell locking. So when I put my $ behind L and behind row 9, L means that this is column L, and you can see it here. We are on column L. 9 means that we are on row 9. You see this now, revenue is on row 9. So putting $ behind L means that you have locked that column. It cannot shift to the right. It cannot shift to the left. Whatever is here, you cannot shift to M and it cannot shift to K because you have already fixed that particular column. So putting the $ behind 9 means that it cannot shift to row 10 and it cannot shift up to row 8. You have already locked that row. So in this situation now, we have locked both row and column. Nothing is going to move. But what we want to achieve is that we want to be able to copy down. So that means that we are going to free that, we're going to remove this $ from behind row 9. But in fact, okay. Let me think about it. I want the column to move and at the same time, okay. So we're going to do it this way. We're going to remove that $ from row 9, but leave it on column L so that when we copy forward, it can sum everything at the same time. So I'm going to click my OK. You can see now that I can copy to the right quite easily. Why copying to the right? It's showing me the cumulative balance. So if you come to, let's just come to the last year. The last year, which is, the last period, which is December, we have 155 million. So when you come here and you try to sum everything together, you can see now, we have to start from January. Everything is giving me what? 155 million. That means that we have returned the YTD. So this is the YTD for February, that is year to date. This is the year to date for March, and it's the cumulative figure from previous periods. Do you understand that? Any question on that, please? Any question on that? Hello? Any question?
Right.
Okay, thank you very much. So instead of doing that same thing, I can just copy down, Control D, and then copy across, Control R. All right? So let's open all these ones up by using our HOT, H-O-I. Okay, so we can still bring the same thing. You can see now. So it saves us a lot of time. This is efficiency. We have to bring in efficiency into our work. Let's try to delete all this. This is December. Okay. So now we can copy everything across. Control R means we are doing our left to right consistency. So the formula must be consistent across columns. And this is just like the basic principle of financial modeling. One of it is that your templates must be the same. All these all these worksheets, they have the same templates. Nothing is different. That makes us to be able to copy from one workbook and copy across. And secondly, your formula must be consistent from left to right. Okay. If I come here like this and then say control, I don't know what this sign is called. So I can see all our formulas at the same time. I can be able to vet if the formula is consistent or not. All right. Another thing I can do, this is simple auditing of financial model. I can come here. I can come home ribbon. Where is that? Alt H. Data analysis. There's another way we can also check that, but let us not just waste time with that. Let's continue. But for our balance sheets, we're not going to use cumulative balance here. Okay? We're just going to use the period balance. Because balance sheet, we work on balance sheet on the basis of ending balance. So we're not going to sum together. We're not going to do anything. We're just going to return the balance sheet just as it is in the monthly financials. So what we're going to do now, we're going to use our lookup formula. And based on what we've been doing from day one, we have different lookup formulas that we can use. Let's try XLOOKUP. XLOOKUP was introduced to Excel in 2016. So if you have anything 2016 and below, you're not going to have this functionality in your Excel. So, but for me, I'm using Office 365, so I have XLOOKUP. So XLOOKUP is asking me for my lookup value. Then another thing is asking for is my lookup array and then my return array. My lookup value is what I want to use to return the balance sheet items. My lookup array will be my list of dates here. It will be my list of dates here from this December, from January to December. Then my return array is going to be all these my balance sheet items. All right, please pay attention here. It's very critical. Once you get this, you get it for life. So you say XLOOKUP. Okay, even before then, I want to do a kind of cell range naming. So from this December 2021 to the next December, I want to name it as CTP underscore, let me use M to show that it is my month-wise financial statement I'm referring to, underscore end of month, EOM. Okay, so I can then call for that automatically. If you remember our day 3, we did a lot of cell range naming. I walked you through how to do cell range naming. So I can then come here from my handy, but I will say my XLOOKUP. What is the lookup value? I want to look up for this December 2021. So the objective is to allow the columns to move, but the row should not move. So I'm going to lock by pressing F4. I'm going to lock the row. You can see that a $sign is behind row, but not behind column. All right. So the way you do that to change from one locking to the other, you continue to press on your F4 until you achieve what you want. Okay, so it's asking me for the lookup array. So the lookup array will be my CTP. So you can see now that by renaming that range, it had created something like a formula. I can use my tab to pick that one up. And then it's asking me for my return array. So I go to my month-wise financials, I navigate straight to balance sheet items or to property, plant, and equipment. I highlight on everything. And then I want to fix the column, but allow the rows to move so that by the time I'm copying down in my year-to-date financial statements, everything will be dynamic. So another thing that this formula is asking us is that value, if not found, what should Excel return? So we don't need to put anything, just use your comma to remove that parameter. So there's another optional parameter. When you see anything in jackets, in this your IntelliSense, this thing that you are seeing here is called IntelliSense. All this thing is called IntelliSense, is in every programming language, and it guides you on how to write your code. Effectively, we are writing code here in Excel. So it's guiding us. So when you see anything in these square brackets, it's telling us that it's an optional parameter. That is why we can decide to impute it. We can stop at this return array. But one thing is essential, because XLOOKUP can give you it can return a wrong value if you don't use this your exact match. All right. So let's just put exact match, return that. This is very critical. That's 0 that you are seeing here. Otherwise, you're going to get a wrong value. And we have OK. So if you go back to our property, plant, and equipment, and you look at December, you can see that it has returned this 2,190,000. And that is what we have here, 2,190,000. Let's just quickly do something. Let me remove this 0. Okay. And then press OK. So it's still returning me the right value, but sometimes it will return you something entirely different. So that is why in every instance, always put this your return exact match. So I can copy to the right and then copy down. So I can just pick the same thing and keep copying. So this is just like you are playing video game, right? Very easy and enjoyable. So you are able to do this simply because you get your cell referencing right. If there's anything you must first learn, if you want to be able to perform good automation in Excel, go and learn cell referencing. And what I mean by cell referencing is cell locking. We have two types of cell referencing. We have absolute cell referencing and relative cell referencing. Relative cell referencing is the one that will allow you to move from one column to the other or from one row to the other. Absolute cell referencing is when you are anchoring to a single position and you don't want that to move. Try and practice it. Get used to it. It's going to be beneficial. And here we are having a problem. So the balance sheet is not balancing. Let's look at why that is. 5.12 and here 5.12. So it's simply because we just need to come here and do that again, minus this. Okay. So let me see if everything is falling in line. Let me check my balance sheet. Where is it starting from? It's starting from 33. And here also is starting from 33. Fine. Let's just quickly build our statement of cash flow. Please, I want you to pay attention here. Under the statement of cash flow. Okay. So you can see that automatically it has generated our statement of cash flow for us. But we just need to do some little changes because this is still not correct the way it is. It's still not correct. Okay. So do you have any question up to this point, or we can go ahead and quickly develop our cash flow? Use the chat box. Should we continue? To know if they, okay. Who is talking? Kindly type something. Let me know if we are to continue or you need a break. We should continue. Thank you, Christiana. Who else? Let's get a quorum. Christiana is saying we should continue. Okay, I have 2 yeses now, so I think we should just quickly build our statement of cash flow. So when we come back from break, we build our quarterly financial statement and half-yearly financial statements. All right, so it's correct up to this point, up to this point, up to this point, but we need to make changes to our working capital, our changes in working capital, because this is not going to work for us the way it is here. So for inventory, you come here to your balance sheet. Previous period inventory, you have to lock that with F4. You know, the last one we're not locking. But this time around, because it's a cumulative, year-to-date financial statement, so you have to lock that previous year balance minus our current year balance. You don't need to lock it because you want this one to continue to move. Then here also, trade receivables. Previous year balance, you lock that with your F4 minus current year balance. Other receivables, the same way. Other receivables, previous year balance, which you're going to lock, minus current year balance. Then we go to prepayments, still the same thing. If you remember the explanation I provided, prepayment to be previous year, which you're also going to lock, minus current year. Then we go to our liability items. Payable, current year. You're not going to lock your current year minus previous year. So you will lock this previous year. What is that? Okay. Then the same thing for other payables. Other payables minus previous year. Lock that. And then accruals. Accruals minus current year. So I think that's all about that. So for our tax paid, we are still going to reference the previous period tax paid. I want to ask a question. There are three important liability items. We have trade payables, we have accruals, and then finally, we have, let's say, I want to explain it this way. We have trade payables, we have accruals, and then finally, we have, what is it called again? We have provision. Can somebody explain to me the difference between these three? So we see our 7 people in the class. Who can explain to me the difference within these three? Trade payables, or let's just say payables, accruals, and prepayment. Payables, accrual, and provisions. They are all current liability items. So who wants to go? Who wants to explain that to me? Who wants to explain that to me? Just keep thinking about it while we continue building our cash flow statement. Payables, accruals, and provisions. What is the difference between the three? And how do we recognize it as accountants? So now we go to our inventory. Inventory also, let us just lock this. This is M36 minus, okay. We're going to lock the previous year balance under our acquisition of fixed assets, okay? We log the previous year balance. And here also, we log the previous year balance. And then we come to changes in borrowing. Let us log the previous period balance, log previous period balance, And here, so this came and okay, we also need to lock the previous period balance. Let me be sure that my locking is correct. Okay, so this one is tax paid. It goes directly to the previous period. So now what is left is to return the right tax paid. I will just need to copy back our last year income statements. I'll come here. We already have the last year income statements. I can then copy this one like this. Or in fact, I can just link it. I can link it. You know, this one we have to use a sum to bring back our year-to-date financials. But this one, I will just link directly. I'll link directly this way. So I will only copy down formulas. I can highlight everything down and bring out my pay special. Then paste as what? As formula. So I should be able to have it just the way it is on the other page. So these are simple Excel functions that make you work fast. So when we go down now, we should have our correct balance, our correct cash flow statement. You can see it now. It's balanced. Then we can copy everything across to the right, provided that we've locked it very well. We can copy everything to the right. And let's see if our cash flow statement is balanced. Our cash flow statement is not balanced. And let's just try to see the reason why. This one is saying 907. And here, what are we picking as our tax paid? We are picking this. Let me just try to figure out why the cash flow statement is not balanced. So this tax paid, let me see. Tax paid is bringing January, but it should bring a summation of these two. All right. This one is already this. 357. I'm just trying to audit the reason why there's a problem there. 356. All right. If I come to my cash flow statements, can somebody tell me why it is not balancing? We are in this together. So if I come to my tax page should be sum of, let me come to this place. If I sum the two together like this, let me see what that is giving me. It's giving me my 1/8. Then this is my beginning balance. I must lock it. I must lock this beginning balance here. All right. And then copy everything to the right. Let's see. Okay. Now let me just pick, let me try again and pick the right. Okay. Let's see if it is balanced now. This one is still showing that 270. So we need to bring back the previous tax page. Okay, I go up here. I bring back my, because it's not every time that your financial statement, everything will balance like that. You need to learn how to audit financial statements. Let's see that for my February, I'm returning 270 as a tax page. All right. So here I must return cumulative balance. So that will be sum of my, okay, let us return it from this monthly financials up to this point. Then I want to lock this opening. Okay, let's see. Okay, it's not yet balanced. Okay, there's an issue. And that issue is, the problem we are having is with the tax paid. And we have to figure it out. Okay, another thing I can do is to say, this one plus this. This is what I'm trying to achieve. Then I think I can fix this. So it should be balanced here. You can see that now. Our cash flow is balanced. Then we can copy everything to the right. Let's check if everything is balanced now. So everything is balanced. Voila. So I want to give us, do you want us to end the session here? Or we should come back and do our quarterly and half-yearly financials? Please advise me. Because we still have a long way to go. That means that we have to extend this. We have to have like maybe day 5B or something. Because we still need to prepare. The last day should be, the last day I want to show you how to perform business intelligence with Microsoft Excel. That will be the day 7. Let's have a break. Okay, fine. Someone said we should have a break. All right, so ladies and gentlemen, let's just go on 10 minutes break. Go and have your coffee or your tea and come back by 12:10. Thank you very much. I'll be waiting for you. Please, when you come back, remind me to restart the recording because I want to pause it at this point. Please remind me to start recording. If you are there, please say something. I want to hear from you. Let's start. Let's continue what we're doing. Are you there? Nokia, Christiana, Kolawole, Abiodun. Are you still with me? Let's just quickly wrap it up. So if you are there, just let me know. Kolawole, are you there?
Yeah, I'm here.
Okay, great. Who else is there? Abiodun. Okay, Christiana is there, fine. So I sent you the workbook. Just pick it up from the chat box and I want you to quickly do something for me. Download it from the chat box. Download the workbook we're working with from the chat box. Okay? Let me know if you downloaded it and I want to give you a task to do. Are you there? Have you downloaded it? Has anyone downloaded it?
Is it different from the 2 that you sent before, the 2 links you sent before?
Yeah, it's different from the 2. This is the up-to-date workbook with everything I've done.
Wow, I've not.
Okay. So what I want you to do for me is that very quickly, I want you to use a different lookup formula to bring back the balance sheet items from CTPM. You know, I have used XLOOKUP, but there are several ways to go about it. All right. I want you to use a different lookup formula so that we can be sure that we can still remember what we learned in previous sessions. Use a different lookup formula to return me. Am I sharing my screen? Not yet. Okay. Let me share my screen so that you see what I'm talking about. So, okay, just a moment. Please, I'm coming. I just want to switch over to lights. Generator. Okay, so will you be able to do this for us? Or, okay, what I want to see by the time you're submitting your own workbook, because by the end of the sessions, I want to see your home projects. So I would like you to use a different lookup formula. You can use index match. You can use VLOOKUP. You can use ordinary lookup, just lookup. It will return it for you. So let me not delay us with that. Let me quickly go to the quarterly financial statements. All right. So the way we've been doing it, let's also copy from here. Let's copy from the monthly so that we don't need to repeat that over and over again. We bring it to the quarterly, and then we just have to paste it. We paste it in like that. And then we can delete everything that we do not need. And in fact, okay, fine. So we're going to extend this a little bit because it's a quarterly financial statement. Okay, fine. Just pay attention to what I'll be doing here. I'm trying to delete all those things that we don't need. All right. Okay. All right, fine. So we have how many people remain? We have 5 more people. Okay. So we're going to use our sum if formula to bring back the sum. You know, we are saying we want to return the quarterly financial statement. That means that this quarter 1 for CTPP, we are simply saying that we are adding the first 3 months together and we are bringing it here for CTPP. The same thing for the next company. We are adding the first 3 months together, bringing it here, add the first 3 months together, just like that. And when we come to this quarter 2, so we are adding from April to June. We're going to put it under quarter 2. And the same thing for July. I mean, the same thing for September, and lastly for December. Just a moment. I need to fix my Alt WFF to fix that at that point. I want to copy to the end. All right, up to this point. I can copy the same formula consistently like that. So as I was trying to explain, you've got to use your sum if formula to sum the first, the 3 months, the number of months within each quarter. So how we do that is to use your sum if. There's sum if and there's sum ifs. But in this situation, we are only going to use the sum if. And that is why, if you remember when we were building our template, we made this quarter 1, quarter 2. This is when it's going to be relevant. All right. So I want to go to my, let me see if I've already named that range. Let me name this range. I want to name this as what? CTP underscore quarter underscore quarter. I think it's okay like this, CTP underscore quarter. Yeah, fine. So I can then come back to my quarterly financials and say, sum if, what is the range? The range is what we just named. Instead of going back to CTP like this, and then highlighting, and then using self-fixing. So this is even much more dynamic than that. So we just call back that our CTP underscore quarter, and then we have it. And then it's asking us for the criteria. The criteria is this quarter here. So we want to fix that row, but allow the column to move. And then finally, it's asking us for the sum range. So we go to our monthly financials again. You just highlight on everything and then fix it. Fix the row, fix the column, but allow the rows to move. Then you close your bracket this way and then click on OK. So this 25.7 million you are seeing, let us try to let us vet it to be sure that we are getting the right thing. So what will be the summation of the first 3 months? That is January to March. You can see now, this is giving us, we are having 28.0, but in our formula, it is giving us 25.76. That means that there's an issue that we need to correct. So this quarterly, and when we come here, quarterly starts from here. All right, it should give me this 28. It should give me 28. So let's just try to do that again. Let me be sure that my quarterly naming is okay, fine. All right, so let's just repeat that process. Sum if, what is the range? That will be CTP underscore quarter. What is the criteria? This quarter 1, which I'll fix the row. And then what is the range? I come here. Even if I pick from this beginning, it shouldn't still change anything. Okay. It should return me 20. Why is it returning 25 instead of 28? Any idea? Okay. Let me see, maybe it's because I'm picking it from that. Any idea of why it's returning 25 instead of 28? Nobody is ready to work with me here. So we have our 28 now. Nobody is ready to assist me. So now we can keep copying down. And then we should be able to generate our financial statement very easily. Okay. Let me delete all these and bring back that December income statement. I'll bring back December income statement. Because it's still going to be useful here. Or is it? Or not really. We don't actually need it. So we can copy everything to the right. All right. I would like to also hide unnecessary columns. I don't need them. Just Ctrl-0. We hide everything. So hiding it means that I'll be able to copy to the right easily. So by the time I just highlight to the right like this, it is stop at exactly that same point. Ctrl-R, Alt-H-O-I to open everything up. Now you can see now that we have returned our income statement. Oh, sorry, I've made a mistake. Sorry. So we are only going to return for CTP, and we can copy this, just this line alone. Copy only this line. In fact, let me delete everything. Let me delete this. But it's going to be relevant for only CTP. That is the parent company, because remember, we're going to be the one to work out for the other companies. So when we now come here, this is for the second quarter. Let us vet that to be sure that we are doing the right thing. So let's try to add the second quarter together from April to June. Now it's giving us 35.2 million. Let's see if that is correct. Here we have 35.2 million. Is that okay? So for the third quarter, we do the same thing. You copy this, and then you bring it under your September. It's going to return the third quarter. And lastly, for December 2022, it's going to return for December. And I think from here, we actually don't need it. So we're just simply going to hide it. All right. So let's just bet. What's our net profits as at December? Come back here. Let's see the summation of net profit for December. I mean, for last quarter. So by the time we add everything together, we're having 14.42 million. So when we go to our quarterly, what do we have? 14.42. Can you see now that it's becoming automated? So let's say, for example, you may not necessarily have all these months at the same time. Maybe the first month, March financial comes in. Immediately, you just impute your income statement and balance sheets. Automatically, the year-to-date will be, if you impute your income statement and balance sheet here, the year-to-date will be computed, the quarterly financial will be computed, and half-yearly financial will be computed. And also, your financial summary will be computed. So we'll get there in the subsequent sessions. So now today, we've been able to successfully compute our month-wise financials, year-to-date, and quarterly financials. So let's quickly bring back our balance sheet items. We're going to bring back balance sheet as of March. And this time around, we are not using quarter one, to return our values. We're going to use March. We're going to bring up balance sheet for March. All right. This time, let us try to use a different lookup formula in Excel. Let's try, which one should we try? Let's see if index will work. Index. Let's see if it will work. Okay, let's just use ordinary lookup. I don't want to waste our time trying to practice new things. Let's use lookup. The last time we used X lookup, but this time we want to try lookup. Lookup value. What do we want to look up for? We want to look up for March 2022. Please, before we proceed, I want to know if you have any question. Ladies and gentlemen, do you have any question for Lashade, Kolawole, Sani, Kolawole? Or I should continue?
No question from my end.
Even in terms of the objective, do you understand what you are trying to achieve? The objective. Hello? We are not just throwing in numbers, but we are working towards a particular objective. And don't worry, you will see it. It might not really show now, but by next week, you will see what we're talking about. So we're going to use just simple lookup. It's asking us for the lookup value. That is the 31st of March, 2022. And we want to lock that row, but allow the columns to move. The next thing is the lookup vector. The lookup vector will be 31st of March within our month-wise financial statements. So we're going to say that is the array of dates. So we're going to just say, we've already renamed that array. We're going to call it CTP _ end of month, and that is it. And what is our lookup vector? So we have to go there. Let's go to our balance sheets. So we highlight on everything. We fix the row, but allow the columns to move. Let's fix the column, but allow the rows to move. Hope you understand the reason why we are fixing now, so that's because I just like to talk the way I want to perform it. You lock the row, but allow the column, you lock the column, but allow the rows to move. Fine. So now we are having for March 2022, we are having 2.1 million. Let's quickly cross-check. March 2022, 2,165,494. And when you come here, 2,165,494. Okay? So you can decide to copy to the right. No, you're not going to copy to the right. I'm always making this mistake. I'm too used to copying to the right. Just copy this way. Copy like this. Now for the liability items, you just copy. You already have that cell referencing is very important, because if you didn't reference it very well, you cannot achieve this thing that we're doing here. So let's see if there's something that I'm missing out. Bank overdraft, this. So why is it not balanced? 8.3 million. And this one is what? 2 point something. So let's say it will be this. Current liability plus non-current liability plus equity. So now our account is balanced. Then we can then copy for all the CTPs. For each of the quarters, this is CTP for the second quarter. This is CTP for the third quarter. And this is CTP for the last quarter. Okay, I think I need to still open up this place. Let's say Control Shift O. Okay, it doesn't open it up. Let me unhide. Okay, so I have up to this point for the other companies. Okay, so this is the quarterly financial statement. I will leave you to do the half yearly. So that means that you have a lot of work on your hands. So it's still the same logic. You just use your sum if function for your income statement items. And then under the half yearly, your lookup value will be this HY. Okay. And when you come to your month-wise financial statement, there should be the HY. Okay, now one thing you can do is that you can create that HY here. You just come here. This HY, we can copy it. Okay, let's just quickly do that, because you're going to be the one to do the half-yearly financial statement by yourself. I just come here. It's going to be a lot of work to walk through every single thing, each of the companies, etc. But by next class, I would have done it for you. I'm not saying that you shouldn't go home and do it yourself, but I would have tried to prepare it so that we can continue from there. It's gonna be too long if you have to do everything. And I can see that a lot of you are already tired. People are already leaving the session. So for our half yearly, we're gonna say this. Okay, let's just use the round up function. Round up. What is the number? We're gonna say month. This month here divided by, that was divided by 3. This one will be divided by 2. And then what's the number of digits? 0. And then we should have 1 here. Then we can copy to the right. From June upward, we should be able to have 2. Oh no, it's not working. We should have, okay, I'm dividing by 1. Okay, let me divide by 6. Let me see. Okay, so that is just, I was supposed to divide by 6. So you can see now that from June to December is showing us that this is the second quarter. Then you can use the format that we have here. Let me just use the format. Okay, there's no format here. So I will separate it by 2 different colors. Where was that? Where did I just do the half yearly? Okay. Yeah. I think I did it somewhere. Okay, I did it in the wrong place, but never mind. So I'll come here. Let me just quickly do that again. So if you weren't following the last time, you can just pay attention now. So you use your round up function. You type in your month function. Which month are you referring to? This January. You close it, you divide it by 6. Number of digits, you just want 0. So that is it. Divide by 6. Why is it returning me 0? Round up, sorry. So it's a wrong formula. All right. So you copy everything to the right. And then let's try to format it. So let's format from January to June, and let's use this color. Let's use, we're beginning to use too many colors. Let's just use this same gray color like this. Let's use this color. Let's use this color. Let's see. Alt ES, and then format value, and I want to format only color. Oh, let me see if this will work. Okay, fine. Alt ESF. So let's just put this in our half-yearly sales style. I mean, not sales style, half-yearly formats. So when you come to your number, we already created that format the last class. Just come here, you see your half-yearly, and then you press OK. All right. So with this heading now, you can then use this to populate your half-yearly financial statements. So that is just how you're going to do this. Finally, let's do this is the last thing we're going to do for today. We're going to return our cash flow statements. So this time we are using formula. We're using formula this time around. So we're going to say sum if, just the way we used it before. Sum if, what is the range? The range is our CTP underscore quarter. What is the criteria? Criteria is still our quarter 1. Okay, let me fix that row. We'll allow the column to move. And what is the sum range? I come here to my statement of cash flow. And then I highlight on everything, and I lock the row. I lock the column, but allow the rows to move. So we can have our total for profit before tax for, that will be for first quarter. Let's quickly vet that. We have 5.066. Now coming here for the first quarter, and that is 5.066. That means that it's working correctly, okay? So you can then copy down as usual. Copy down. Copy down. So we don't need all this for now. I'm going to delete everything to the right. I can just pick anyone. Copy down these two. Copy down these two. Copy down these two. Do we have a balance account? Opening balance. Our account is not balanced yet. What is going on? Anybody? Anybody to assist? So here, difference is 5 point something. So we need our opening balance cash as at December. All right, so let's just quickly go and pick that from our statement of cash flow here. But I don't think that alone will solve the problem. this should come as this. I'm still having the difference of 5 point something. Ending cash balance is this. Okay, let me just do it here. Plus, let's say, net cash flow from operations plus net cash flow from investing activities, and then finally, net cash flow from financing. So now it is balanced. Okay. Now we can then copy for each of the quarter. And that is for only this company, the parent company. So you copy here. We come and see if it is balanced or not. You copy here. And then you copy here. Let's check. It's not balanced because of opening balance. So the closing balance, the opening balance for the next quarter will be the closing balance for the previous quarter. All right. And then I'm still copying this one here. Balance at the beginning. Are you still with me? So we have this.
Yes.
Okay, this will be this. We are still having this minus. Okay, now it's correct. It's just that Excel is taking time to process it. So this one will be 0. And finally, the opening balance here will be the closing balance as at previous quarter. So that is it, ladies and gentlemen. Now, you should just go ahead and populate other things. You first need to pick the monthly financial for each of these 4 companies, fill it up, then use that to prepare your year-to-date financials, then prepare your quarterly financial and half-yearly financial. So in our next session, what we're going to do, I would have populated everything here. We're not going to do the consolidation. That is consolidation for month-wise for each of the company combined, consolidation for YTD, consolidation for quarterly, and consolidation for half-yearly. And after doing that, we will also create summary reports. And it is that summary report that we're going to put into our PowerPoint. I would have designed the template for the PowerPoint. I would have done every necessary things. In fact, I will design the template for the consolidation so that we don't come back and do it again and waste a lot of time. So is there any question before we end the session for today? Any question? We still have 5 people before we end the session for today. It's a very long session actually, but it's good. Or any comments?
None from my own mind.
You can make a comment. Comments are very good, so that will make us know where we need to concentrate on. So Folashade, can you build this all by yourself without any assistance? Up to where we go? Like, can you go through this on your own? Hello, Folashade.
Hi, Shagun. I can hear you now.
Yeah, I'm asking, can you build this template and do all these things on your own now, going forward with this knowledge?
So this will be my first class, right? So I wasn't here when you guys started, but
Okay.
I think I followed it.
All right.
But then I definitely cannot do this by myself.
Yeah, but when you get the workbook, you get the video, you can go over it as many times as possible. The numbers here are just assumptions. I created all these accounts myself. This is going to be different from how your company account is going to look like. You might need to tweak one or two things. You might need to combine things, but just make sure that your template is even. Everything is the same. Okay? Abiodun, you were in the last class. Can you do this kind of thing going forward? If you find yourself in an environment where you need to prepare a consolidated report. Abiodun. Okay, so invariably, let's just call it a day at this point. And I look forward to receiving your workbooks. If you can send it to me, I'll be very happy. You can send to me. I know we are all busy. These are highly professional people. We have our daily activities, but just try. Before next weekend, try to build this model, populate everything. And if you have any problem along the line, call me or message me and we can resolve it together. Okay? I'm available throughout this week, anytime. Just let me know. So thank you very much, everybody. Have a nice weekend. There's still time for enjoyment. You can still go out today or after church or whatever tomorrow. Goodbye.
Thank you, Shagun. Thank you, everyone. Have a
Thank
great
you.